Global markets have been jittery for the last couple of weeks. US Fed definitely is in a tightening mood, and the interest rates they have indicated that will go up in March. The speculation is whether the hike will be 25 or 50 basis point, and accordingly, the risk gauge, risk aversion or risk on mood is forming. Consequently, the global markets as well as Indian markets have seen a major sell-off by institutional investors. In fact, since the beginning of January, India has seen FIIs selling stocks worth about 36,000 crores. Coupled with this, India has seen rise in inflation, global rise in crude oil prices, slowing down in demand and growth. And all this is in the backdrop of forthcoming the big event, Union Budget. Markets naturally are jittery, and we have been seeing nervous traders lightening positions, investors booking profit and waiting in the sidelines, and a general sense of wait and watch in the midst of FII continuous selling. There are a whole lot of expectations from this budget, and they predominantly hover around the fact that economy probably needs one more round of stimulus and support from Government of India. The state governments' finances are in precarious condition, and the work or the heavy lifting of providing stimulus has to be done by the central government. That's the general feeling going around. Also, the fact remains that while rural India has benefited from multiple central government schemes, whether it's NREGA, direct benefit transfer, or MSPs for agricultural commodities, unfortunately, urban poor haven't really got too much from the government, and they are in a precarious condition, which is leading to overall slowing down of consumption across the country. Government probably needs to desperately look into providing some relief to urban poor so that the demand and growth of the economy gathers back momentum. There are sectors which definitely can do the same, and focus on healthcare is absolutely critical. We expect government to remain focused on healthcare infrastructure and related areas. Multiple schemes can be announced for healthcare. We believe that the government will try to encourage investments, long-term investments in this sector, and that should augur well for the economy in terms of value creation as well as employment generation. The other sector which employs the largest number of urban poor is real estate. Real estate has been doing well of late, with interest rates being historic low levels. The demand for residential and even commercial real estate has gone up significantly. However, this sector needs absolute focus of the government to ensure the economy keeps moving along and the urban poor gets taken care of. Real estate, I will repeat, is a sector which urban poor relies on to a great extent for their livelihood. The next sector which should remain under focus and has been a source of major excitement is the EV. Multiple policies, multiple announcements have come both from the government as well as individual companies announcing their plans in this area. We haven't yet seen anything concrete on the ground in a significant way. However, the effort of the government will be to definitely encourage both charging infrastructure creation in the country, manufacturing, indigenous manufacturing of batteries, and also assembling of EVs. The PLI schemes announced and probably these will get enlarged in the current budget, and the market as well as the industry will look forward to that. If we have to make a successful transition to a high-tech economy with least pollution, EV is absolutely critical, and I think that augurs well for employment as well. Overall, we believe the budget will continue to focus on the economy, the room for maneuverability for the government, considering the state of union finance, is not too much. However, successful disinvestment of large corporations like LIC can generate the required resources to support some of these programs I just mentioned. From an investor point of view, we believe that wait and watch is probably the best option at this stage. Stay liquid, wait for the opportunity, wait for the market to turn around, and then start investing in good quality stocks. Even in current market, we believe good quality construction and infrastructure companies can definitely be looked at. We like NCC, we like Larsen & Toubro, and we like real estate companies like Godrej Properties, Oberoi Realties. These companies have a clean balance sheet, excellent track record, and government schemes will definitely benefit all these companies in the coming years. Valuation-wise also, they do look attractive. For the investor, whether to invest immediately or wait for few days, see the market stabilize, I think it's a matter of choice. Investors may do well to start investing slowly and build position in these stocks. Thank you.